Hello and welcome to episode 4 of Market Maker Mondays. My name is the Nomadic Trader and going to get straight into it this week. And I'm also going to go into why we were calling those key levels at 4200 and 4220 on Friday last week. So starting on the monthly time frame, we have already been calling this to be moving higher since we were down here. And what I want to draw your attention to is the fact that this level looks like it is going to be a bullish order block, which that's not to say that we're not going to see prices come back down in to mitigate the 50% mark of this level. I think that is very likely at some point. But in the near term, what we need to be focusing on is the fact that we've got this swing high here and this swing low here. So I want to put my dealing range on the monthly time frame there. You can see the respect that we get at that 50% mark. And then we're currently trading in a premium within a monthly time frame. And then we've got this level here. So monthly bullish order block. So when I go down to the weekly time frame now, if you check the significance of this and how we respected it, and we're anticipating higher prices, you go down to the weekly time frame, you look what we've had here. So we've had a big bearish candle, we've traded through it, and then we've actually started to respect the mean threshold 50% mark of this down candle. I think that is likely to form here as well. But for the time being, we can't just assume that. We can anticipate it, but we're not expecting it. We need to not marry the vein, as ICT calls it. So we can't actually become obsessed with that narrative. But what we need to do is we need to consider that within our overall framework from the top down. So the monthly time frame, we're in a premium and we are on the 21st of August. So we've still got enough time to be able to finish this candle further. And then where do I think that could be going higher? I think it could be coming up to the open price on this candle, the close price on this candle. I think that's an area of significance on the monthly time frame. So if we go down to the weekly time frame, we've got that here. So that's actually 50% of this level here. So where we've actually got this run up here, where we've got this bearish breaker. So we've taken the lows here for the sell side, then we've traded higher, we've taken the buy side, and then we've just crashed the market. So in terms of this as a key level, I would say that's definitely one to look out for. But out of accuracy, what I'm going to do, I'm going to remove that, and I'm going to highlight that level there, and I'll label that as a weekly bearish fair value gap. So that's actually the upper boundary of the fair value gap. And then I will actually remove that. So weekly fair value gap. So if you have been following the series so far, last week you will see that I did actually outline the fact that we could either gap or we could trade up to this and then we could come crashing down. And then the way that I actually finished the video last week was on the 1 hour time frame. And when we were looking at the current price, we were actually at a premium on the 1 hour time frame. So I said, if this does want to go higher, I'm going to anticipate some form of a retracement on the 1 hour time frame to come back into 50% mark, and then to show some form of respecting that level, and then a turnaround in price on the 15-minute time frame to then trade that higher. So we did actually see higher objectives. We've actually come back in to take this buy side liquidity. We've traded into this fair value gap, but we haven't yet reached the mean threshold. So we've already covered what we outlined in the previous video and sort of just showing evidence that that has actually come into fruition. But where does that actually leave us for this following week? So overall, I think that we are actually still bullish. but the order flow or the near-term direction, in my opinion, is bearish, because I've never seen price react to a level like this on a weekly time frame and then just simply turn around and go up. If you go back through price, it's very unlikely to do that. So I'm anticipating some form of follow through to breach previous week's low. And then if you look here, we've actually got a weekly fair value gap. So I'll highlight that on as well. Weekly fair value gap. And then this is the upper boundary. So on the weekly time frame, because we've actually respected this level, we're now trading lower. We want to anticipate lower prices at least into the beginning of the week, depending on what the market structure shows us on the 1 hour time frame, Monday and Tuesday. And always remember that Monday will be a misdirection, and then Tuesday into Wednesday will often give you the reversal into the correct objective. So on Monday and Tuesday, this traded higher, turned around during Tuesday's trading, and then it came back down, and we saw a market reversal here. So we've got that lower boundary on the weekly time frame. We're expecting it to come down on the weekly. So if we go down to the daily time frame, how does that narrative serve us now? So we've got this weekly price level. This is the current dealing range on the daily time frame. And you look at this, so the 50% mark is actually bang on 4219.20 on my data. So you would round that up to 4220. And that's where ICT got the 4220 level, because it's actually the 50% of this dealing range. And also, if you've got enough experience, you can look at the time of day, look at the current trading volume within the market, and you can also project / anticipate when or where or both the low and the close is going to be, or at least the low, because we need to come and close back into the range to give this here. So on this daily time frame, we came all the way down. We pretty much hit the 4220 mark, and then we closed back into the range a little bit. So if you have a look here, between this level and this level, we've actually got a daily fair value gap. So we'll go ahead and mark that on. Daily fair value gap. I am at this moment in time expecting this to remain bullish, because we've swept the lows here, we've traded higher, we've got in retail higher high, higher low, higher high, higher low, blah, 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 blah. And then this is the current dealing range here. We are still classed as being in a premium. We've got this key level here, which is the daily fair value gap. The upper and the lower boundary here, I'll leave this on as well for the time being. And we've actually got the weekly fair value gap, lower boundary, in and around the 50% level of this fair value gap. So what we need to be doing is we need to be, at this moment in time, expecting prices to remain bullish until we see something significant. Now, I don't know if any of you watching are experienced enough in trading in general or just with ICT teachings, but if we have a look at this price action a little bit closer, do you notice this level here? So we've actually got a near-term or short-term swing low, which has been broken to the downside. So that could indicate that we actually want lower prices now. However, that isn't confirmed until we see a lower swing high here. And I'll give you an example. In this price structure here, we've actually got a swing low, which takes out a swing high. Now, if you're trading advanced intraday and day trading, this for me is enough to be anticipating higher objectives for the high of this and the high of this into this imbalance, because I'm familiar with the ICT teachings about liquidity and the whole sort of purge and revert. However, if you're not that experienced, what you need to be considering, and this is actually from his short-term high probability scalping series. There's 3 short episodes in it. I would highly recommend it. So you've got your swing low here, which breaks a short-term swing high. And then what we're looking at doing is we're expecting another short-term swing high, a short-term swing low, which is higher than this previous, to give us this change in market direction and a confirmation that the pullback has ended. There are other things that you can incorporate to get better and not have to wait for all of this confirmation. But if you want better confirmation, you want more accuracy and higher probability on your side, I would strongly recommend you consider this. So in this example here, following the principle that I've outlined here, we've had a short-term swing low broken to the downside. We're still within a premium environment, so we're anticipating lower objectives into this region here. If we come down into here and we see a market structure shift on a 1-hour time frame, I'll then be expecting price to come back up, and I will be aware that we could print in a lower swing high here for lower objectives. Because on the monthly time frame, this is just one run up with a couple of candles. So you've got 2 candles here, which actually gives all of this daily trend. So on the monthly time frame, we could potentially end this bearish into here, then trade low in as a low test into the mean threshold, and then reverse to go higher. So we need to anticipate all of those different things. But for now, in order to actually give you your daily directional prediction, your DDP, which is absolutely essential for intraday and day trading, in my opinion, if you're looking to hold for longer or further objectives, you need to be trading in line with the daily run. And you need to be anticipating where that daily expansion is, in line with a weekly expansion, in line with the context of this monthly pullback. So on the monthly, we've created this bullish order block. We are trading higher, but at the moment, this hasn't been confirmed as anything other than a simple retracement on the monthly. So within that context, if you just excuse me, I'm just going to have a sip of drink. Wet my whistle. So this is the monthly swing high. This is the monthly swing low. On the weekly time frame, we've actually broken this short or near term swing high. We've also got one here. So this to me is a market structure shift on the weekly time frame. So it might still look like we are in a retracement on the monthly. However, with the significance of that order block that's formed, and using this as a clear example of what that could entail within that, the narrative on that single time frame, I'm expecting prices to come down within this region here. I would love to see this area hold. So price doesn't always have to go up and then come back down and then go up and come down, or go down in a trend, reverse, go up in a trend. It could do one of 3 things. It can go up, it can pull back, which is what this is currently doing. It can go up and it can consolidate, which is what this was, or it can go up and it can completely reverse, just like this did here. So given the narrative on the higher time frame, I'm expecting to see a higher low form in and around this region. And if we do, I'm going to have the confidence to suggest that we're aiming for levels of 360 and higher. Maybe, I mean, we've got 440 there, but that's actually pushing into this area here. But we can also have a look, depending on where we finish, So if we take the fib extension tool, and if we finish, let's say at that weekly level here, that symmetrical move from A to B, C here, and then D extension will take us into this region here. So that's additional confluence if we see the confirmation on the daily time frame. So with that said, let's go down and show you the significance of this here. So this is the daily short-term swing low that we've now confirmed has broken to the downside. But if you have a look here, so we've got this level here, we've got your swing low, we've actually broken, we've come back in, traded into this fair value gap here, and then we've traded lower. We take the fib tool, and then we go like this. We've actually completed this as a one-to-one move. So this leg from here to here is equal from this leg from here to here. And then what does that look like when we put it there? I mean, it looks even cleaner like that, doesn't it? But I wouldn't ignore this in price. But that, I mean, that to me, in terms of the actual bodies of the candle, looks more accurate. But you can see the accuracy of that completion, which was just ahead of the 50% mark. So into next week, what I'm anticipating is lower low, lower high, lower low, retracement, lower high. This is the new dealing range. If price starts to retrace from here, we might actually just keep printing lower and come into this to then reverse on Tuesday and higher. So you've always got to be anticipating different scenarios, but you've got to keep all of that mindset with the overall framework, because if one key level breaks or holds and then you see something else in price action that is influencing the whole trade thesis, you need to switch gears and you need to just come back, delete all of your key levels, start again. Okay, what does that look like now? What's happened? What's the significance of that change? How's that being influenced? What is everybody else going to be thinking as well? That's what I think. So if I see something in the market that I wasn't expecting, I will always look to see who's on the wrong side of that. And if it looks too good to be true, I'm going to trade against them, because 90% of retail traders are losing money and I want to be taking their money. And so it's nothing personal really, but you need to be thinking in those terms. So we've got this dealing range here, and this is the new dealing range on the 4-hour time frame. In order to maintain structure, we need this level to be respected. Doesn't necessarily mean we're going to get a clean break and retest like we did here. We could do. That's going to come down and then it's going to come back into a premium. We've got this 4-hour fair value gap. 4-hour fair value gap. So we've got an imbalance there. Let's have a look to see what that looks like on the 1-hour time frame. So sorry, if I just go back to the 4-hour, you look how clean this looks. You go to the 1-hour time frame, look how messy that looks. Just so much choppiness really. I'd actually anticipated that if this level here was to have broken significantly and come back down to respect this level to create an internal range, an internal trend forming, that we could actually be anticipating higher prices. But obviously that was off the cards when we came lower. And I shared in the Discord group the two options, that I'm either going to be trading within the range and trading it back to the 50% mark, because this was the daily range from the weekly high, to the weekly low. This was the interweek high and low, and then we were just consolidating. So I was anticipating internal range liquidity to be taken, and then a trade back to the 50% mark, which was actually here. So if anybody follows supply and demand, or if you've ever followed supply and demand, this is actually a drop-based drop formation. But I like the significance of maintaining that 4-hour fair value gap it gives me a bigger PRV, so potential reversal, PRZ, potential reversal zone. So we've got that level here. So I'm going to be anticipating prices to come back up and to take some of this short-term high back into the range. And then if we make it this high, then I'll be expecting prices to come back down, and I'll be looking to take profits in and around the 4,200 level, which actually gives us this sweep here for sell side liquidity and trading into the fair value gap here. And then depending on what happens on the daily time frame will give me confidence to as or not we're actually reversing. In the meantime, the way that I approach the market is this is going to still remain bearish. I will scale back my risk because I could be expecting some form of trickery around here. So I don't want to be trading full leverage size. I'll reduce my risk size, and I'll just get a feel for the market without giving too much profit back. And that will just sort of keep my finger on the pulse in the market. But I'm actually trading with my bias within the overall scope of the framework and the context of the higher time frame. I'm trading between daily swing highs and daily swing lows. So if we create a swing low here, a 1, 2, 3 candle, I'm expecting higher prices. If we create a swing high here, because we've actually swept this liquidity, I'm now changing my bias and I'm going lower. So hopefully that's given you some insight into, again, the higher time frame narrative, the scope of the daily bias. It's going to give you the institutional order flow to give you like that maximum probability and also the momentum. And we've also covered all the different time frames. I'll still be looking for a run on the 15-minute time frame, but I only look at entering the market if we trade at the correct time into a 1 and or a 4-hour PDRA, which could be an old high or an old low, and it could be a fair value gap. So I'll have the 4-hour and the 1-hour levels put on the chart. If my overall bias is still bearish, at the moment it is, then what I will expect is time and price. So depending on what the overall price action is looking like on the daily time frame, I will either look at taking a London trade. If, for example, like this here, I'll be looking at trading the higher the candle and then taking that lower. Or if I miss the London Open, then I'll be looking at coming in the afternoon. So what does that look like? So we had this here on Friday. So this here was a fair value gap. You've also got this candle here. Draw that out in time. I'd actually got the low of this candle drawn across. And you go to the 1 hour, sorry, that is the 1 hour time frame. You go to the 15-minute time frame. You've actually got, this is what I got drawn on in price. Here. So we got a sweep of the buy side liquidity. We actually traded into this. This is given buyers the induced liquidity, the narrative that this is a breakout and this is a reversal. But all that's done is it's just induced liquidity, and it's paired the smart money sell orders with all the pending buy orders up here for the stop losses and the breakout artists. And then we've actually come back down to trade this here. And we've done exactly the same in the afternoon and then come back down. And just as I shared in the Discord group, as soon as we reach this objective, we would just meander basically into the close to come off the low of the range of the weekly time frame. So this is exactly what I'm looking for, in line with the overall narrative. So we're going to have a look at what happens at the beginning of the week. Hopefully you've got some value out of this. And if I go to the 4-hour time frame, you can see this is the 50% mark of this dealing range here. this dealing range was actually confirmed as a retracement, and this is a premium environment once we've seen a market structure shift here, because otherwise, if it was still going up, this would just keep going like this, wouldn't it? So when this short-term low was broken to the downside, we created that fair value gap that automatically classifies this as an intermediate swing high. And then you've got your lower swing high, your higher swing high, and then you've got your lower swing high here. And obviously all of this price action is subordinate to this. So this would have actually given you a really tasty OTE trade, and that would have been in the afternoon, just after 1 o'clock lunch at 2 o'clock. Beautiful. Hopefully you found this insightful. Hopefully you've got some benefit from it. If anybody's got any requests as well for some deep dive feature topics, please put that in the comments. I'm always open for feedback, and I'll also include the link for my other channel where I'm living full-time in my car that I've converted as a micro camper. I'm still working full-time, 9 to 5 at the moment, but at the end of the year, just after Christmas or into the new year, I'm going to quit my job and get a part-time job 3 days a week, and then focus on the remaining days with becoming a full-time trader and establishing my trading career properly. So if you want to follow me on that journey, the link will be in the description below. And always keep safe and happy trading.